If I had to restart trading knowing everything I know now, I would do it completely differently and it would save me years. And something we won't cover, but should be pretty obvious, is you need to learn the basics, like candlesticks and how to read them. There are very good free YouTube videos on this, so that's part of it. Also, the non-negotiable before we get into this video, whether you're just starting or already trading, you must have an income source. Now, while you're unprofitable, you will lose money. No one is perfect. There is a learning curve. Now, what we will cover today: picking a strategy that fits you and where to find it, how to test that strategy the right way, the psychology of it all and what actually slows you down, risk management and discipline, and how long this realistically takes. Now, with all that said, here's the general rule I like to follow when picking a strategy. Every strategy comes down to three things: win rate, risk reward, and trade frequency, and you cannot have all three. The best you can have is two of the three. So, when you're looking through strategies online, free or paid, don't be surprised when you don't find that one high win rate, high trade frequency, and a high risk reward all at the same time strategy. That combination doesn't exist. Now, before we get into my stats, the only way you figure out your strategy results long term is backtesting. Backtesting is basically going back in the charts and testing your exact strategy rules on past data to see how it would have performed over time. You're replaying the market and seeing if what you're doing actually works before you risk real money. Pretty sick. And for every strategy you backtest, ideally just one at a time, you want to use it and make sure it's profitable, but also be content with the results. And for every strategy you backtest, you should be doing at least 1 to 2 years of backtesting. Now, you do not want to overdo it and backtest 10 hours a day because you will not be able to focus that long even if you think you can. You'll start taking worse trades out of drainage. Your data gets messed up and now you don't even know the real results of your strategy. Then you move on to the next one and the next one and keep repeating the cycle until you get frustrated and quit. We do not want that. Now, here are my average monthly stats. I have a high win rate, around a 70 to 80%, depending on the month, and a relatively high trade frequency. So I trade about 2 to 4 times a week. You might not think that's a lot, but you do not need to trade every day. I actually made a TikTok on that and how trading less actually improved my results. My risk reward is about a 1.3 to 1, so it's a strong strategy. But again, you're not looking for the best statistical strategy once you backtest and see the results. Sometimes it's better to have a simpler strategy than an overpowered one so you can last longer. What I mean by this is if your strategy is simple, you can execute it very well every day. But if it's complex, you might hesitate, break rules, or have a blow-up day. I have a relatively simple strategy with clear rules, and because of that, I can trade it consistently. I also know people with insane strategies and amazing stats, but they want to literally rip their hair out because of how stressful it is. So, when you're picking a strategy, especially in the beginning, go with the simplest rules possible. It will save you a lot of time, and you do not need the best strategy. You need one you can actually follow. Now, I'm not teaching my strategy right now, especially not for free, because I've put in a lot of work into getting that extra edge. But here's how you can find one. Go on YouTube and search best day trading strategies or something like that. There's a ton of free info out there and different approaches. There's ICT, support and resistance, and order flow, and just a bunch more. Pick one that actually interests you, and more importantly, one you feel like you can follow every day without deviation. And honestly, I don't even think what I trade is that important. Yes, I will make more money and be able to stick to my strategy a lot better than a large majority of other strategies out there, but there are so many profitable strategies out there. The strategy you pick is only a small part of the puzzle. The majority is psychology, and that's what I want most of this channel to be focused on anyway. Now, since we're talking about psychology, here are the things that actually help. Having a trading buddy, journaling your trades, and having something outside of trading. You do not want to make trading your whole life. For a trading buddy, this helped me a lot. I've always had someone I could bounce ideas off, talk through trades with, and just stay grounded. And when I was in terrible spots mentally with trading, I still had him and vice versa. And it keeps you level-headed and it stops you from being stuck in your own head all the time. For journaling, I do this every day. For me personally, I absorb info better when I actually take the time to write things down every day. What I did wrong, what I did right, what I was feeling, all of it. That's how you actually improve. And if you're not tracking what you're doing, you're just guessing. And now having something outside of trading, like friends or family, or just anything to keep you busy, it's way more important than most people think. I've gone through 3 to 4 month periods where I cut everyone off thinking I was getting more work done. And I only did the opposite. You get more stressed, you get more emotional, and it starts affecting your trading. More time on the charts doesn't always mean better results. You need to balance or you'll burn out. Damn, okay, that's a good line. Now, risk management and discipline. Here are my general rules, especially in the beginning. Don't check your P&L constantly. It's a bad habit, and thinking it won't affect you is exactly what will slow you down. When risking money, always look at the dollar amount, not the contract amount, before placing a trade. Now, you want to know exactly how much money you're risking. Thankfully for me, it's very easy to know the exact dollar amount because I trade futures where every point moved is a fixed amount. It's not like options where slippage and other factors come into play. How much you risk depends on your account balance. Most prop firms, which is what I trade, have a max loss of around $2,000 on a 50K account and about $3,000 to pass. So your risk depends on your win rate and risk reward. For example, if your win rate is 80% with a 1-to-1 RR, you can be more aggressive to pass the account. Risking around 500 to make 500 with a 1-to-1 is a solid starting point because it's enough to satisfy you without making you feel like you need to overtrade. So for most of you, this is how I would approach it, especially evaluation accounts. Focus on consistency first. Prove to yourself that you can follow your rules and stack wins over time. And after that, you can start being more aggressive and scaling up. For me, I try to pass the evaluation in the fewest minimum days that the prop firm I'm trading requires. And I can do that because I've done things properly in the beginning. Now, I can focus on getting funded as quick as possible because I don't want to waste trades on evals when those trades could be making me money on funded accounts. But for you guys, you should take things slow at first to prove you can actually trade your strategy properly. Now, the real question is, how long is this whole unprofitable stage going to take before you actually see some results? How long this takes depends on directly how early you start doing things properly. I've said it before, if I had 6 months with someone, working with them every day and making sure they followed everything correctly, I think they could be profitable. But realistically, for most people, it's going to take 1 to 2 years. And it shouldn't take much longer than that, like it did for me, because the info available is now way better than it was 5 years ago. And something I want to be clear about, I don't have a course right now, and I'm not planning on making one anytime soon, but I'm not completely writing it off either, because if I ever do something like that, I wouldn't want it to be a big course with hundreds of people. It would need to be very small, like 5 to 10 students at a time, and the goal would be to actually work with them closely and get them profitable within a certain time frame. I would never take hundreds of students, even if I could still provide solid value at scale. I'm already going to be putting out as much free value as possible on YouTube anyway. So there you go. So to kind of recap everything, you don't need the perfect strategy. You need one that you can follow, backtest it properly, keep it simple. Focus on psychology just as much, if not more, than the strategy itself. Manage your risk and give it time, because if you actually do all of this the right way, there is no reason you cannot become profitable. Now, the question I have for all of you is, are you going to actually follow this or just keep doing what you've been doing? I pray you take my advice, because I've been doing this for a while. Now, on that note, thanks for being here and listening. Like, comment, and subscribe and all that jazz. And I will see you in the next video. Peace.